Hold on, banks aren't even legally required to verify your income? There's no law that says credit card companies have to know your salary. There's no regulation forcing them to check it all?
Picture this. You're scrolling through your banking app, just trying to check your balance before grabbing coffee, and suddenly your screen freezes. A bright pop-up takes over everything. We noticed your income information is outdated. Update now for better credit options. There's even a cheerful little button that says update now, like it's doing you some massive favor. I stared at that screen for about 5 seconds before swiping it away because I know exactly what game they're playing, and it has nothing to do with giving me better options. Here's the truth that nobody talks about. When you hand over your income details to a bank, you're basically giving them ammunition to use against you. You're feeding them data they will absolutely use to make decisions about your financial future. Decisions that help them, not you. Every single time you fill in that income field, their algorithms start waking up. Numbers start crunching. Your entire profile gets reorganized in ways you'll never actually see, but you'll definitely feel it when the bills come. Banks have somehow convinced everyone that sharing income information is just normal, routine, maybe even legally required. They sneak income questions into applications like they're asking what color your car is. They send these friendly-sounding update requests that look like customer service doing you a solid. They make everything feel so standard that most people never pause to ask the obvious question. Why do they really want this number? And what exactly happens once they have it? The answers might completely flip how you deal with financial institutions from today forward. Let me hit you with something that'll probably annoy you. Banks are not legally required to ask for your income in most cases. There's no law anywhere saying credit card companies must know your salary. There's no regulation demanding your bank keeps updated income records on you. They ask because they want the information. They ask because having it helps them squeeze more profit out of you. This difference is huge. When something is legally required, you don't have a choice. When something is just requested, you actually do have options. Banks intentionally make this confusing because smart customers make choices that cut into their profits. Think back to the last time you filled out a credit card application. It definitely asked for your annual income. You probably typed it in without hesitation. Why wouldn't you? It feels like basic information everyone needs. Everybody asks for it. But here's what was happening in the background you couldn't see. The second you hit submit on that number, the bank's algorithm instantly put you in a category. Your income became a data point in a file that controls how they'll treat you going forward. Not just whether you get approved, but what interest rate they'll charge you, what credit limit they'll give you, what offers will flood your inbox, and how hard they'll push additional products on you. Let me break down exactly how this works because the mechanics are both fascinating and kind of disturbing. Credit limits are the most obvious way banks use your income data. They use the income number you give them to decide how much credit to hand you. Higher income usually means higher limits. On the surface, this sounds fair. Someone making $150,000 can handle more debt than someone making $50,000, right? But here's the catch. Higher credit limits aren't always good for you. They let you spend more. They create more chances for debt to pile up, and they multiply the total interest you could end up paying over the years. Banks know that people with higher limits usually carry higher balances. A $30,000 credit limit doesn't just mean you can spend more. It means you probably will spend more. The bank isn't handing you a high limit as a trophy for your success. They're giving you more rope because customers with more rope tend to strangle themselves with interest payments.
Interest rate decisions are where income data gets turned into a weapon in ways most people never notice. You'd think higher income means lower interest rates. After all, people who earn more are safer to lend to, right? Reality is way more twisted. Banks use your income data mixed with other factors to figure out not just how risky you are, but how sensitive you are to prices. Someone pulling in $200,000 a year might not bother shopping around for a better rate. Someone with serious income might not even notice or care about a few percentage points of difference. The algorithm knows this. It changes its approach based on that knowledge. Studies have actually shown that wealthy customers sometimes get worse terms than they deserve because banks correctly guess they won't bother negotiating or switching to another provider. Your high income becomes a signal that you can be charged more without them losing your business. This practice even has a name in banking circles. It's called ability to pay pricing. The more you can afford, the more they charge you, not because you're riskier, but because they know they can get away with it. Marketing and constant upselling is the most annoying way banks use your income data against you. The moment you reveal your income, you get dropped into a category for targeted offers. High earners get bombarded with aggressive pitches for premium cards with massive annual fees. They see endless offers for personal loans, investment products, and insurance packages. Every single login becomes an obstacle course of sales pitches perfectly matched to your income level. Banks know that someone earning $180,000 is way more likely to say yes to a $550 annual fee card than someone earning $60,000. They also know that high earners usually have messier financial situations, which creates openings to sell even more services. Your income data isn't just sitting quietly in some database. It's actively being used to separate you from your money. Lower income customers face a totally different version of this nightmare. They get fewer premium offers but way more predatory ones. Balance transfer deals with hidden fees buried in fine print. Personal loans with brutal interest rates. Credit limit increases specifically designed to push them into overspending. The targeting is razor sharp because the data is razor sharp. There's something even more disturbing that most people never think about. Income data doesn't go away. When you tell a credit card company your income, that information doesn't vanish after your application gets approved. It sits in your file permanently. It gets used for decisions you'll never hear about. It gets shared with partner companies and affiliates in ways that privacy policies technically allow, but most customers would never expect if they actually knew. That income number you typed in 5 years ago might still be controlling how you're treated right now. It might be getting factored into decisions about whether to jack up your interest rate, slash your credit limit, or close your account completely during rough economic times. Banks have incredibly long memories. Your data has an insanely long shelf life. Now let me answer the question you're definitely asking yourself. When do you actually have to share your income and when is it totally optional? Mortgage applications require income verification. This is actually mandated by federal law. Banks must confirm you can actually pay back the loan under qualified mortgage rules. You'll hand over pay stubs, tax returns, employment verification, the whole 9 yards. There's no way around this, and honestly, you wouldn't want there to be. Buying houses with no income verification is literally what caused the 2008 financial crisis. Auto loans usually require income disclosure, though how strictly they verify it varies wildly. Some lenders do complete verification, others just accept whatever you tell them. The requirements depend on the lender and how much you're borrowing. Credit card applications ask for income, but here's what almost nobody knows. Credit card companies generally do not verify the income you report. They can't see your tax returns without your permission. They can't access your pay stubs. They're completely relying on whatever you tell them. This creates a really interesting situation. Banks want your income data badly enough to ask for it, but not badly enough to actually check if it's accurate. What does that tell you about how they're really using it? Those random income update requests that pop up in your account are completely optional. You're under zero obligation to provide updated information. The bank wants it desperately. They don't actually need it. Those pop-ups are designed to look mandatory while being entirely voluntary. Let me be crystal clear about something right now. I'm absolutely not suggesting you lie about your income. Providing false information on a credit application is fraud. It's illegal. It's genuinely wrong. Don't do it. What I am suggesting is that you think strategically about when and whether to volunteer information that will be weaponized to make decisions about your financial life. There's a massive difference between lying and simply declining to update. When a bank asks you to update your income in the middle of your relationship with them, you can just close the pop-up. You can leave the field blank if that's possible. You can decline to hand over information that isn't legally required. This isn't being deceptive, it's protecting your privacy. Consider how lopsided this relationship actually is. Banks hold massive amounts of information about you. They know your spending patterns, your payment history, your debt levels, and your financial habits down to the smallest detail. They use incredibly sophisticated algorithms to analyze all this data and extract maximum value from the relationship. Meanwhile, you know basically nothing about their internal decision-making processes. You don't see the algorithms running. You don't understand how they're categorizing you. You have no idea how your data influences the terms you're receiving. Refusing to volunteer additional information simply makes the relationship slightly less one-sided. It puts you on marginally more equal footing. The bank can still see your behavior. They still have tons of data about you. They just don't have the one specific number they want most. Here's a real-world example of how this actually plays out. Imagine two customers with identical credit profiles, identical spending patterns, and identical payment histories. One customer regularly updates their income whenever prompted. Their income has climbed from $70,000 to $95,000 over 3 years. The other customer has never updated their income since their original application. The first customer now gets hammered with aggressive marketing for premium products. Their credit limit has been increased twice without them even asking. They're being set up for higher fee products because the algorithm sees rising income and rising opportunity. The second customer gets standard marketing. Their credit limit stays stable. They fly completely under the radar because the bank's algorithm has way less information to work with. Which customer is actually being served better? It depends entirely on what you personally want. If you want maximum credit access and don't mind getting marketed to aggressively, then sure, update everything. If you want to be left alone and keep your terms stable, consider keeping your information as minimal as possible. There's another angle to this that deserves serious attention. Income data affects how banks treat you during financial emergencies. When the economy tanks, banks review their customer lists and make hard decisions about which customers to keep and which to cut loose. Credit limits get slashed, accounts get shut down, interest rates get jacked up. These decisions are made by algorithms, and your income data plays a role in every single one. A customer who reported high income might see their credit limit protected because the algorithm predicts they'll keep making payments. Or alternatively, that same high income might make them a target for aggressive rate increases because ability to pay pricing suggests they'll accept worse terms without complaining. A customer who reported lower income might see their credit limit chopped preemptively as the bank tries to reduce risk. The algorithm treats them as higher risk during uncertain times regardless of how well they've actually been paying. The only way to avoid being sorted by these algorithms is to give them less data to sort you with. The less the bank knows about your income, the more they have to rely on your actual behavior. Payment history, how much credit you're using, and how long you've had accounts open become the main factors because income data is missing or too old to matter. Behavioral data is way harder to game than whatever number you type into a form. If you consistently pay on time, keep your credit usage low, and maintain accounts for years, those signals scream louder than any number you might enter. Your actions become your identity rather than your claimed income. Let me tell you about something that happened to someone I know. She was working as a contractor with income that bounced around wildly, sometimes earning $8,000 a month and sometimes $15,000 depending on how many projects she had. When she applied for a credit card, she reported her income conservatively using her lowest earning months as the baseline. 2 years later, she got a credit limit increase offer. The bank asked her to update her income to process the increase. She entered her current earnings, which were way higher than what she'd originally reported. Within 3 months, she started getting constant phone calls about personal loan products. Her credit card offers completely shifted to high annual fee premium cards. Her mailbox got flooded with balance transfer promotions designed to push her into debt. She had been reclassified. Her peaceful relationship with her bank turned into an aggressive sales campaign practically overnight. She never updated her income again after that experience. When the pop-ups showed up, she closed them immediately without hesitation. Her banking experience went back to normal within about 6 months as the algorithm stopped getting fresh data and her profile slowly faded back toward default treatment. This shows something crucial about how bank data strategies actually work. They're optimized for fresh information. Old stale data is way less valuable because it's less accurate for predictions. A 3-year-old income number doesn't trigger the same algorithmic responses as something you updated yesterday. Banks absolutely know this. That's exactly why they ask for updates so persistently and so often. Every time you give them fresh data, you reset the entire clock. You become a newly identified target. The algorithms wake up and immediately start working on you again. There are legitimate situations where updating your income actually makes sense. If you want a higher credit limit and your income has jumped substantially, providing that information can help your case. If you're applying for a new loan and a higher stated income improves your approval chances, disclosure serves your interests. The key is being intentional. Update your income when it genuinely benefits you. Decline to update when it serves the bank way more than it serves you. Make conscious, deliberate decisions rather than robotically filling out every form that gets shoved in front of you. Consider the lifetime value calculation banks run on every single customer. They estimate how much total profit they'll extract from you over the entire relationship. Income is a major input into this calculation. Higher income suggests higher lifetime value, which justifies more aggressive tactics to acquire and keep you. When you refuse to help banks calculate your lifetime value with precision, you become harder to optimize against. You introduce uncertainty into their models. Uncertainty usually leads to more conservative treatment, which often actually benefits you as the customer. There's also something worth saying about the psychological dimension of all this. Banks have trained us over decades to feel obligated to provide information whenever asked. The request carries this implied authority. The form creates this sense of requirement. Most people comply because not complying feels awkward or even risky. Breaking free from this conditioning is genuinely liberating in a way that's hard to describe. The first time you close an income update pop-up without filling it in, you might feel slightly anxious. Did you just do something wrong? Will there be consequences? There won't be. The bank will ask again in 3 months. You'll close that pop-up too. Nothing will happen. Your accounts will keep functioning normally. Your credit score won't budge. The bank simply won't have the fresh data they were hopping for. Over time, you'll start to realize how much of banking is pure theater designed to create compliance. The authoritative-looking forms, the urgent-sounding requests, the implications that things are required. It's all carefully constructed to maximize data collection from customers who don't realize they actually have choices. You have choices. You always had choices. The bank just really preferred that you didn't know that. Let me give you specific practical recommendations for managing income disclosure going forward. For new credit card applications, go ahead and provide income information because it's basically required for approval. But be thoughtful about what you actually report. If you have variable income, you don't need to report your absolute best month. If your income has multiple different sources, you don't need to include every single one. Report accurately within these boundaries, but don't volunteer more than absolutely necessary. For income update requests on accounts you already have, close them without responding unless you specifically want something that requires income verification. There is zero penalty for ignoring these requests. They will disappear and eventually pop back up. You can ignore them forever. For credit limit increase requests, decide whether you actually even want the increase. If you do, providing updated income might be necessary. If you're completely happy with your current limit, decline the request rather than handing over income data to enable an increase you don't even need. For loan applications where income verification is actually required by law, provide exactly what's required and absolutely nothing more. If they ask for tax returns, give them tax returns. If they ask for additional documentation beyond what's legally required, ask why before you comply. When banks call you asking to update your information, remember that phone calls are specifically designed to create pressure and urgency. You can simply say no. You can tell them you're not interested in providing that information. The call will end. Your accounts will stay open. The bigger principle here extends way beyond just banking. Every institution that asks for your data is collecting it for their benefit, not yours. They might frame requests as serving you better, improving your experience, or ensuring accuracy. These framings hide the actual purpose, which is enabling more precise extraction of value from your relationship with them. Data minimization is a completely legitimate strategy for navigating institutional relationships of all kinds. Provide what's legally required. Decline what's optional. Understand that every single piece of information you share will be used, analyzed, and turned into money in ways you cannot see and would not approve of if anyone actually asked your permission. Banks are not evil institutions trying to destroy your life. They provide genuinely valuable services. Credit cards, loans, and deposit accounts enable economic participation in ways that benefit everyone in society. But banks are also profit-maximizing entities that treat customer data as a resource to be mined and exploited. Understanding this dynamic doesn't require you to be cynical. It requires clear-eyed awareness of how the relationship actually functions in reality. Banks want your data because it helps them make money from you. You can choose how much data to provide based on what serves your interests rather than automatically serving theirs. The next time that income update pop-up appears on your screen, you'll know exactly what's really happening. The bank wants fresh ammunition for algorithms that will optimize their profit, not your experience. Close the pop-up without guilt. Keep your information to yourself. Let your payment history and responsible behavior speak for themselves. That's the data that actually matters in the end. And unlike stated income, they can't get it just by asking nicely with a friendly-looking form.